Good afternoon, everyone. Microphone check, screen check. Looks like everything's working correctly here. All right. Good. Hey, everyone. John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the daily afternoon market recap and offering overview. Over the next 30 to 60 minutes or so, we're going to be covering what took place today, the trade setups that presented themselves per the rules outlined in our Day Trading Academy and VIP trade plans, as well as just some of the setups that kind of occurred along the way. Now, I am going to talk about every setup that presented itself today, but remember, not all patterns and setups are created equal. Because I cover all of them, that means that longs in a downtrend and shorts in an uptrend are just as good. The main reason for that is for fairness. That way we can ensure that we're not cherry-picking patterns and stuff like that. It's all just for review. Don't forget, before we kick this off, smash the like button and let the YouTube algorithms know what's up. And also, make sure that you subscribe to the channel so you don't miss any of our videos coming out every single day or our live sessions. If you want to hang out with me and the rest of the VIPs for the entire U.S. morning session from 9 a.m. until around 11:30 or 12 o'clock lunchtime, you can register for a one-week trial in our private VIP live trade room, and you can see how we trade the markets in real time while they're moving. Plus, when you register for a trial, you also get to get our 24-page guide on risk reward, along with the ability to schedule a 30-minute phone call with me to discuss any questions you have about joining as a member and anything else that you may want to talk about. And the best part is, it's totally free. There's no credit cards or any of that other stuff required, so register today and get on the calendar for a call. If you have any questions about what it is that we offer, what we have available, trade setups, anything really, we do a Q&A time after the charts and the review while we're looking for some scalping opportunities, so we will definitely get you covered. With that all out of the way, though, let's take a look at what happened today on our old buddy, the NASDAQ, and a couple of the other markets here. First off, one thing that's going on in a big way right now is it's finally pulling back to a point that's at break even. All day, the market's been grinding its way up, and you'll notice we have another day where there aren't really any patterns. The only pattern that we had was a short, which we didn't take. But there was a short opportunity from a pattern perspective that was a bounce 3, which would have been a -1R if you're just taking every pattern. But realistically, with this amount of momentum to the upside, this is one of those times where we call that common sense card. Yes, the pattern's there. Yes, it's a -1R loss as far as the records are concerned. That's there. But that's a really, really difficult short to take. Really tough spot. The volume has been building up the whole way, and these horizontal lines that you see, it may be kind of difficult to see all of them, but each one of these, and there's a blue line under that pink one, are entry points or POCs along the way while the market was rising higher and burying the shorts. Now, I say burying the shorts because obviously the longs are doing just fine, but we want to see where the shorts tried coming in. Where did they get in? Did they get their targets? In this case, they didn't, which is why we're tracking their earlier entries. And because they did not, are they going to be given a chance to get out at break even? This is their chance to get out at break even. We've got lower high, we've got a couple lower highs, and we're in a little bit of a transitional phase. The break even point of all the POCs, here, the one under here, and here, divided by 4, gives us this big, thick pink line, and that is the break even average for the majority of shorts. It may not be the POC anymore. POC's up here at 255, but the break even point for a lot of shorts is going to be around that 186.25. and that's where they're trying to push to right now. If we look off the top down to that POC point as well, we can see that it does line up a couple areas. Scalper's target is there. 1-to-1 target is there. We've got the break even just there. There's a lot of things that are suggesting that we should see more continued momentum down to get the job done. Doesn't mean they have to end it there, of course, but at the moment, at least, the bulls are looking for a way in that is more beneficial, and shorts aren't going to want to sell way the heck down here anymore. So if we look at it from a perspective of where it is now, at least, we have the bears, which have cycled off the top. The last major pullback was an L3. The one after that was an L4. And now after the L4, we are getting a breakdown continuation. Sheesh. So sellers will be looking for the L1 continuation down to the 186.25, but it's going to be tough to want to sell away the heck down here. They're going to want a better price. before I lose this thing to the ether. Make this a color that I can actually see here. There we go. All right. Sellers will be looking for a continuation phase to the downside on the NASDAQ off of L1s. The S&P is also breaking down pretty aggressively underneath the larger POC. If these sellers are going to be continuing it to the downside on the S&P, and that POC is their point of interest, their downside targets aren't until 45.58 at the least. Sellers still continuing the pile drive to the downside. Heavy bearish pressure. S&P sellers are also on the drive lower. Big blow-off move too, jeez. All right, 186.25 is the break even for a lot of shorts who got stuck on the move. They haven't quite made it down there yet either. From a longs perspective, if the bulls are looking for a way in, that's the spot that bulls are going to be looking for a bounce. From the 15-minute perspective, I mean, we're kind of in the middle of Nowheresville, and if anything, the bears have some context here. But we'll see what they do. We're right around the break-even point for shorts. S&P has just got straight down bearish pressure. We've got another huge candle gap possibly forming. Downside target on that bad boy is way down there. 58. See if the NASDAQ wants to back off into the L1. We are seeing a bounce off the 186.25. That's the earlier shorts getting out at break even. All right, see what they're able to do here. Quite the little fist fight that they've got going on here. S&P's got some huge candle gapping they've been able to build in. As far as downside objectives, yeah, they still got a little under 3 minutes left on the candle, so things can change. But for now, at least, downside objectives are at 58, and it hasn't changed from there. We do know that the 186.25 area is a lot of shorts who got stuck earlier in the day getting out at break even. That's what this bounce is. The question now is, do the sellers just sweep it right back down and keep things going? The way that the 15-minute chart looks, it doesn't seem like that would be the case, that this is going to go reversing all the way back up to the highs. But, you know, at one point, this was a really big bear bar too. So a lot of things can change. Sellers keeping the pressure on. Okay. More bounces happening here. S&P's got a minute 20 left on the bar. Which way do they get to break? 186.25 looking to retest again, maybe? That's a big spot. A lot of traders hitting that break even. Why does this always move? 40 seconds left on the 5-minute bar. rejection off that 186 quarter. Hey T, how's it going? Good afternoon. Looking to see if the sellers can rotate this back down and get some Jamba juice going here. The downside objective is the 15,135 original target area. That's the overall, what all of the sellers are looking for is the 135. Now, if they really want to go max greed on their break-evens would put targets all the way down at 15,108.75 or so. That'd be nuts. I mean, if they really want to go, their max greed target would be down to settlement again. That would be insane. End of day move all the way to settlement. Oh, lordy. We do have a lot of bearish pressure going on to the downside with the S&P. Obviously, bear bar, bear bar, bear bar, all the way down. The one concern that we have whenever we've got stacked bear bars that are back-to-back like that is that the first attempt in the opposite direction is going to fail. And that's usually the case more often than not. So the first time that this reverses back up is more likely going to be treated as a zone of resistance. I'll be looking at the 67s or so, if they're able to climb up there. The NASDAQ is bouncing off of... I accidentally deleted the whole thing. They're looking for that L1 continuation off a little bit further up. They've got up into like the 210 quarters or so. S&P sellers have the 67s or so. Still not a whole lot going on yet. Let me unclutter. And again, just so that I don't lose track of the overall pattern, that's based on the... No, not that. The bounce 3 that happened from before. They're not fib levels, but it is the Fibonacci tool, yeah. The Fibonacci tool is like my Swiss Army knife. I use it for everything. I have my DP levels that are plotted on there. I've got the little purple line is 50%, so that's for like break-evens and risk rewards. I've got my targets that are plotted above for negatives, 2 to 1s, 3 to 1s, 5 to 1s. The levels in between are all part of our trading system, that's what we all cover on, what is that, Unit 2, Chapter 8 in the Academy. But I use the fib tool for everything. That's like, if you see something getting measured on my chart, chances are it was the fib tool in some way, shape, or form. Hey, Raphael, how's it going? Good afternoon, my friend. S&P testing the entry point, no fill. There we go. See if we can get that 66 1 point smooth little move back down again off the top. The NASDAQ is in the zone of resistance. Swept in the second target on the S&P. Aggressive scalps at 67. Combined between the two is still 1 point. NASDAQ, no bear bars in terms of the continuation. It's understandable as to why. The NASDAQ had their break-evens hit at 86 quarter. Finally. Testing the target, but no fill on the S&P. Testing the target again, but no fill. And S&P finally fills the scalp. Now, in terms of the continuation down, we're still defending the candle gapping. Candle gap objectives are just a little bit below, but remember, you know, as far as candle gaps go, technically this is filling in. So the downside target would now be up here at 61.75 or so. Oops. NASDAQ seeing a bit of bearish pressure inside of here. Got to see the sellers show back up to the party. Can we get another kick up in speed, or what do they want to do here?
We should shortly be expecting the results of the Fed's reverse repo facility usage.
Those last few bull bars on the way up into this zone make it a little bit more difficult. It'd be nice to have some extra confirmation. Nice little bear bar continuation for the shorts to try to drive the market back down. Now, as far as the zone of interest, the one consideration here, and I'm going to be playing it on a more aggressive side if I can get a fill at the scalp, is that they've already kind of penetrated, what a horrible word, the top of the top of the zone here, and with that rejection above the highs, it's not optimal. You prefer them to be like this. It didn't, so I'm going to treat it a bit more aggressively for a continuation down on the shorter scale. I was only able to grab one, but... S&P is also looking for its continuation phase down for those objectives. What did you do before you started trading? Man alive. I've been trading for like 15 years. So it's been a minute. But before trading, I've worked in shops, factories. I've worked as a butcher. I've worked at grocery stores. I've worked a little bit of everything. But it's been, like I said, it's like 15 years. It's been a minute.
NinjaTrader counterparties take $1.679 trillion at the Fed's reverse repo operation.
Bears still continuing back down again. Candle gap is still open. Downside objective is not too far away. I was a floor manager at a wood shop in the finish end for a little while, doing moldings and all of that stuff. A little bit of everything, you know. Bears still continuing to the downside. Oh, S&P to the tick. Oh, there they go, right through. Target filled for the S&P shorts as well if they wanted to hold out for the larger one. Big drive down, back to the break-even point on the short side for the NASDAQ. I opted to be on the more aggressive side and just take it as a scalp. The extended target did reach back down, though. My concern was the bounce off this 186 quarter. It's too much of a break-even. They weren't going to be able to go back down. Well, oh well. Hindsight's always a fun one. Trade what we know at the time. Sellers still driving down. Nice continuation phase lower. Beautiful bounce 3 into a bounce 1 rejection. Picture perfect straight out of the academy. I mean, like right there. Beautiful. As far as the S&P, we've got the one scalp so far, but it definitely opened the door for a lot more than that. They did reach down and grab the target. And look at the response down there. Jeez. I think it's safe to say the sellers got their target filled, huh? Wow. All right. NASDAQ also with a sharp reversal back up. And that was kind of the concern going into that short and why I took a smaller target and waited for a bit more proof and for speed to increase and all the other fun stuff. It just was a little bit of a zone of restlessness. You can see the NASDAQ did make it back down to that 186 quarter, but look at the bounce. I mean, the concern is real. S&P seeing a rejection back up as well. Looks like a lot of targets got hit on that candle gap fill. Algos are having a heyday as we go into 130 around the corner here. What the rest of the market? What's everything else looking like? Crude oil getting annihilated all the way back down again, of course. Man, I tell you what, it never fails on crude. You can see I had a bunch of entries inside there. I tried building into a short on crude the majority of the morning, knowing that the inventories were expected to be bearish. Everything was supposed to be bear. The numbers came out bearish. It moved, like everything was perfect. And then it did this, shot all the way up to 87, which is where I did not want it to go, and then forced me to have to drop back out when it started driving down, just in time for me to get out at the original entry point to see it drop twice again. Like, for real? Yeah, I tell you, man. Crude oil's taken some notes from NASDAQ lately. Jeez. All right, fair enough. I did jump ship on that crude oil trade when we got back to the original entry point. I wasn't expecting it to double down. Oh well. Nice little bearish continuation phasing off of some patterns this afternoon. The S&P offering up some nice scalps into possibly a bit more out of them. Now, don't forget, if you are looking for a way to hang out with me and the rest of the VIPs in the morning session, you can set up a one-week trial at the live trade room on the main page of SSFTG. You can hang out with us from 9 until 11:30, 12 o'clock, lunchtime. How do you come up with these targets that you know shorts are going to get out of their targets or longs are going to get out for break even? It's a multitude of things, and I know the first answer to this, and everybody hates this answer, but it's time and experience. And I mean that in all of the worst possible ways that Murphy could ever slap you in the face. Because a lot of the experience comes from being on the wrong side of it. Right? And in the understanding that you got in at the wrong place and got trapped, and you're desperately hoping for everything that you can, dancing around fire pits and whatever, that the stupid thing comes back and lets you out. It's being on the wrong side of it more than once and understanding the pain of that side. And when you start realizing that the market is just comprised of just that, it's an ebb and flow between more than just you and I trading 1, 2, 5 contracts, whatever. I mean, we're talking like JP and Goldman with thousands, okay? It's an ebb and flow where JP will be in the positive and Goldman's in the negative, and then Goldman stuffs it to JP and then they switch places for a little while. It's this ebb and flow back and forth. That's why it's a net zero game in the end. But, as it stands, we have to kind of look at it from both sides. And this is something that we delve into heavily on a lot of the video topics, including the Academy, of course. But this is where we have this build up the whole way higher. And like we were talking about when we first started the afternoon room, the original POC of this whole move up, and the assumption would be that these would be sellers. They had a nice drive down. The POC was here at 135. As the market climbed up to another new high, another POC was built at 169.25. It's almost as though the shorts tried getting in, failed, added a little bit more. Right, remember, we're talking deep pockets, thousands of contracts. They've got liquidity. That's not a problem. Goes up to another new high. They build into another short. Drive in another. I know you can't see it, but there is another blue line under there. It was another POC. And then it took a little while, and you can see them building. There's your obvious volume build. Usually comes in 3 spikes that go gradually larger. It's right there into the climactic POC 255. That final POC at 255 drives the break even. If you take all 4 of their break even entries, or all 4 of their POC entries, they weren't break even for a while. But if you take all of those entries and divide it by 4, because there were 4 of them, then you know where their entry is, give or take, right? I mean, again, we're talking hundreds, possibly thousands of contracts here. So, it's a zone, but I know that generally speaking, based on all of the price action that's taken place on this move up, the longs have some seriously green pockets right now, and the shorts have been absolutely obliterated. So if the shorts got obliterated, one side won, the other side got ran over, they're going to have to bring that back into parity. Bringing it back into parity is effectively allowing the shorts to get out at break even, which is right here. But that also is more than just shorts getting out at break even, it's longs reloading for the move back up that hasn't had a pullback all day. So it's everybody doing the same thing at the same spot for different reasons. That's when you get these bounces like this. And it doesn't mean that you have to be a buyer there, But it does mean that I have to change my approach as we go into that zone. I know that this is a huge spot. If these were longs, and again, remember, we can measure this both ways. If these were longs, all of these POCs, let's say that they were buyers buying while it was going in their favor. Their average points at 186.25. So if we measure the low of day, assuming that that's where their stop would be, to their average point, and we go across, do we see, and again, I use the fib tool for everything, but do we see targets at logical points? Do we see the market responding to these areas? This is the scalper's target. This is the 1-to-1 target. The 2-to-1's off the screen. You can't see that. So you tell me, did it respond to the scalper's target? Did it respond to their 1-to-1 target? Yes, would be the answer to that. So even from the bull's case, if you flip the entire measurement, we know exactly what they're doing. As long as you know how to measure it properly, of course, that helps. But it's just, you know, that's what it comes down to, is measuring both sides, understanding where the highest probabilities are, and then taking your shot there. The sniper lining their shot up, if you will. There's a lot that goes into knowing that 186.25 is a problem. Didn't matter. It still went back down and would have gotten full targets, but hey, yeah, I did what I could as far as homework is concerned. Yeah, for sure. I wish I had an easier answer for you, you know, but it's just not an easy answer type thing. And that can be said for any market. If you throw a random market at me, a stock, a future, Forex, it doesn't matter. You can break it down the exact same way. I mean, literally, see, it doesn't matter. Cockroach futures? Sure, if you can find me a chart, we'll break it down. You know, and that's the thing. Just because, you know, there's an infinite amount of people doing an infinite amount of things for an infinite amount of reasons, chaos theory, as far as the markets are concerned, that doesn't mean that they won't do the same thing at the same place for those different reasons, you know? That's where you want to stack the odds. Yeah, the POC areas are something that I'm constantly watching all day, especially when we know that somebody got railed. And today is a good example of somebody getting railed. If shorts were trying to come in, and if we look at yesterday's price action, I mean, look at the drive down, right? It's a sideways market, tried going off the highs, failed all the way down, failed all the way down. Of course, sellers are going to be trying to sell for another leg. It didn't work. But just because it didn't work doesn't mean they didn't try. It's just, you know, now that they know that it didn't work, now they got to get out. They got to reposition. The longs have to come back in. The shorts have to get out, and that's where they're going to do it. Now, you can also back this up and go a little bit further and say, all right, this is the zone of interest, but I don't want to be too early to the party. I'm not a big fan of juggling knives. I want to take the safer route in. So you wait for the market to get into your zone, give a little bit of extra proof like the speed or size or whatever else, and then you find your follow through short after that. Or if you're looking for a long, you're waiting for a rotation back up, a repetitious pattern in the opposite direction. Whether it's a fib, a POC, a head and shoulders pattern, it doesn't matter, but you're just designing those areas together to create the zone. When you start seeing those break-even points in the scalp targets and the way that algos operate, you can't not see it. It's everywhere. It's like the crooked tile in the hallway, you know? It's just nothing you can do. You'll always see it. S&P is backing up towards the highs, recycling off of the earlier entry point. There's some decent resistance up here in the 6750s as well. It's only a minute and a quarter left, though. Kind of tough. Yeah, actually, if I pull over my chart, I've got a chart of Crow up as well. I was watching that earlier. You'll notice the first thing that you'll see on there is an order flow. I have it drawn on everything. That's what moves the markets. That is the market, is the volume. The POC is everywhere. Like Apple is an example. Let's use Apple. See, there it is. That's just, chances are you're going to find it on one of my charts. It's always there. Sellers still trying to hold true on top of that L1. Man, they are really, really slipping there. Got buttery fingers, but they're hanging on. Wicked wick on the top of the S&P. Holy moly. They're going to bury this thing into the floor at this rate. We do know that the sellers from earlier have gotten out at break even, especially on the NASDAQ. Very obvious bounce off the break even point, even to the point of a double bottom. But if they start migrating through that area, all of those break evens, remember, the market operates as first in, first out. If they liquidate here, just because that's their break even point, that doesn't necessarily mean that they have gotten completely flat. In fact, the whole way up, if they've been selling, are the ones that are still left, which are in a very profitable situation. They might not necessarily want to jump ship straight away. So before we gain proof of this being a full-out break-even, we'll probably see, well, stuff like this, where it starts going sideways and holding, maybe even a higher high transition. Then they go down. That's when they hit the exits. They're like, all right, no, it's not working. I'm out. And then they go away. Whew, man, bears pushing right back down again, back down to the previous target on the S&P as well. What do you think about Bitcoin right now? I can't help but see the giant ascending triangle on the daily and weekly. This dip was to be expected, in my opinion, the retest low. Oh, yeah, for sure. It's a value dip. 100 million%. Totally agree. Now, you know, here's the thing. Whenever I'm looking at, and I deleted my chart, hang on, trading view. When we go out on Bitcoin to a wider perspective, and we look at what's going on from the daily, get that off there, and we see, you know, the overall larger picture. There's one of two things that stands out from where we are now to historical price action. Historical price action, the last time we had a really, really strong breakout, and we have to use a different exchange, but that's when they broke out above the highs. Let me see here. What is it? Poloniex? Where are you? Poloniex. There we go. Okay. So back here, before the market broke above the 20,000 mark, and they lifted all the way up to the... On Poloniex, it was 19,903. Whatever. We had this very, very similar situation took place where the market was pulling back. We had a lower high, dove lower, found a balance, broke out below the lows. So the concern was that this was going to happen again over here. We have a really, really massively strong breakout. Starts going sideways, doesn't make a lower high. Whew, good, right? Goes up again. Starts going higher. Awesome. New high. Perfect. Nothing changes. Lower high. Oof. Okay, good. They made a new high. Ooh, pretty aggressive sell-off. Oh no, lower high. We start getting this concern of like, wait a minute, this is the same crap that happened last time. We can see it back here where it just kind of gets buried down here, hovers around, false rallies up, dumps the low, takes the stops, and then goes screaming like 7 bajillion% to the upside. Right? So the concern is like, oh my God, are we going to deal with this again? And then it started doing it. Right? So we're like, oh, come on. Then things changed. Right there is where everything switched. Now we've got something different. We've got a new high that hasn't happened before. That doesn't mean that the market won't come back and bury itself down here and dink around and then do the same thing, go whoop, and then go screaming back up to the highs. That, in fact, is actually my concern. We are in a major zone of interest. And if we measure this up from the top to the bottom from value, right, we've got a value dip. I'll just measure the initial pulse. Just the impulse move down was 53.59%. If we look at the latest impulse move down to the base of this was only 39. So, you know, there's some concerns that this isn't enough. It needs to go further. If we were to look at something like 53, 54%, like in parity, that puts it right back to 30K again. So I like this area, but they need to show up to the party, like now, yesterday even. From a volume perspective, Poloniex isn't the winner here. I can't look at volume on Poloniex. That would be stupid. We've got to look at it on Binance. They win. As far as the volume is concerned on Binance, we can see that the balance point where the longs have been trying to get something going. And remember, we can measure this both ways. But from the longs perspective, they're not doing so great. Right? They bought into the 47s and they had a little bit. but for the most part, they're underwater. If these are shorts, so far, they just started going in their favor. So you've got to kind of approach this from both sides and look at it from, have the shorts been satisfied? Well, the shorts minimum target isn't until like 36.6. They've got some way to go. And if we look at this from the other side, from the bulls' perspective, have the bulls been satisfied in any way, shape, or form? The initial bounce up is right here. And again, to prove that they've been satisfied, we can ask ourselves, is there demonstrated support or resistance at these levels? And the answer should be very obviously yes. So the bulls have gotten some of their targets. We've just now made a new low. So, I mean, realistically, the bears and the bulls are kind of riding the struggle bus right now. Is this a trap low double bottom before a move up? Or is this kind of the preceding move before a big breakdown? I don't see the bulls winning the fight. Not until they get back above like 47, 48. They've got to tip the scale back up. I have a hard time believing them where they are. Side note, though, right, if we utilize previous info, going from the top to the bottom, just like they did last time, when they were finally able to shift the POC down, because for a while it was hovering up here, they finally shift it down, that's when the thing goes rocket ship, when it gets above there. So if it is able to get above the 48, make some new highs, then it's got a shot to go catatonic, go crazy. But we need a bit more proof right now. To me, we're in DCA by the dip, not full-blown positions, because the bottom might not necessarily be in yet. I don't see the bottom until like 32, 33,000 in the near term. If that doesn't hold, then 20K all the way. That's so wide open and waiting, it's ridiculous. But I just don't trust it yet. I want to, but believe me, I want to so bad. So bad. But I can't yet. They need a bit more. Now, like I said, to me, in full transparency, full disclosure, I'm still dollar cost averaging in. Anytime that the market, for me at least, is below 30% off the highs, I'm buying a little bit more every day. Buying a little bit more every day. I'll skip McDonald's, buy an extra $5-10, right? I mean, like little small bits and pieces and increments, dollar cost averaging in while it's on the cheap. And then later on, when it explodes up to $1 bajillion, then we can cost average out. Historically, we've never retested the previous cycle's all-time high, which would be 20K. The time before that was at 3,000, which at the time was, I believe we specifically said this will be the last time that Bitcoin sees 3,000. It's just gone. If they hit 20,000, you'll hear me say the same thing. This is the last time that we'll see 20,000 again. It's not coming back. If it hits it ever again. That's going to be unbelievable. Big if, of course. But while it's off the highs, it's DCA. Play it safe. Not worth dumping a mortgage payment into, but at the same time, it's worth, in my opinion, of course, everybody's different, but the risk of throwing a few bucks here and there in for the potential of it going 10x, yeah, sure. All right, I'm thinking that the NASDAQ shorts are done. They are not looking like they are getting anything else taken care of. The S&P is also running out of steam. We are running into the end of the afternoon session as well. So let's get some questions in, get those covered, and then we'll rock and roll. Oh, yeah, totally. That's one of my favorite ways. Just go opposite of the fear and greed index. Or even more facetious, just watch CNBC and do the opposite of what they say. The last big expose that I saw from them on crypto was how to buy Ripple at like $3 or something. And then like a week later, after everything fell apart, they were talking about how to sell Ripple at $1. Like, oh yeah, bingo, nailed it. It's the CNBC filter. When they're talking buy, time to dump. I'm out. Peace. You know, it kind of sucks because, you know, like, people with, like, Jim, and he's got that huge fund that does a lot of benefit and a lot of good. You know, I wish they were right more often to a degree, but then the other part of me is like, Ebola Jones, I love the name. Market's working its way back up towards the L1, but honestly, I feel like that level's been kind of exhausted. We're getting a bit later in the day. Big bounce point. A lot of the shorts have been able to get out. Be careful on this bounce. Shorts might not actually have what it takes to press back. This rate is horrible. It's entertaining, though. I don't consider it very useful, but it's entertaining. It's fun to watch. I want a giant soundboard that I can smash buttons on. I mean, hey. But as far as trading advice goes, more power to him. But follow the money trail, you know. He may say something's a buy, but did he? It's like when JP was talking about Bitcoin and it being a horrible investment. They were the largest buyer in the dip. What do you expect? You follow the money, you know the truth. It's how it works. At least as far as the CNBC analysts and all of them go. Bull bar? Now this is a deceiving bull move. This is one of those that may not look like it's very strong, but honestly could have a lot of backup to it. I want to see if we can get a little bit of a dip down into like the 65s, back up a bit just to get a slightly better price. God, the bid ask shifted like one tick away. Can we get it? $65 to $64. Not getting a fill. There we go. Up to 66. Holy crap, straight up to it. Yeah, so that's why it took so long to get a fill. Everybody was trying to do the same thing in the same place. Jeez. Oh, nice way to end the afternoon there, huh? That's fun. No, I don't know who that is, but that's funny. I feel like every sector has something like that, you know? For me, I'm more about the numbers. I'm an analyst. Numbers just, that's what makes sense. The cool thing is with like crypto and blockchain is everything's trackable. You can see where it's going. Well, to a degree at least. I don't think there's any more news coming out for today. Well, at least it's important now. Last thing was at 11:30. It depends on the level of aggression. I mean, when we're talking the afternoon side of things and the liquidity on the markets, yeah, I mean, there are levels of aggression and sometimes not, but depends on how many contracts you want to play. Effectively, a point a day can mean a lot of different things to a lot of different people. One contract or 100. You just got to be careful with the liquidity right now on the S&P. Trying to go heavy on the S&P when there's like 5 contracts on either side, you're going to have a hard time. Well, not 5, you know what I mean. In fact, let's take a look. Instruments, ES. What am I, blind? There we go. Yeah, I mean, right now you're talking 20 contracts on either side. I mean, this is nowhere near what it used to be. You know, like 3, 4, 5, 6 years ago, it would be like 400, 500 on both sides. The market also barely ever moved. Thing was a snooze fest, but you know, it was there. It was thick. It was like trading bonds. It took forever to go anywhere, but you could jump in with 100 contracts and the market wouldn't even flinch. Now, you drop 100 contracts, you're going to absorb 3 price levels. So, I mean, times have changed. You know, now it's all about volatility. Smaller size, bigger distances. If you want to trade thick, Then you've got to trade, I would assume the bonds are still probably pretty hefty, right? They've got to be. They always are. It's not the market analyzer. I don't care about the market analyzer. Give me the level 2. ZB. What's the... You know, the notes are even thicker. Yeah, this is what the S&P used to look like. Like this. This is what the S&P used to be. A couple hundred on both sides, no problem. The bonds back in the day were thousands. Everything's gotten way thinner. So that's the thing, you know, like on the bonds, if you wanted to float in and just drop 100 contracts on the market, you could totally do that. It's not going to do anything to it. You'll eat like a quarter of a price level. Nothing. You want to talk, what's the ZN? You want to talk big boys? Yeah, now you're talking thick. This thing's a bowl of pudding with oatmeal in it, man. This one's big. 3,000 per level. We did it's been years now since we've traded the notes and bonds, but we had an order resting on the market, and it took them 5 minutes of them sitting on my price to give me a fill. That's how thick it is. It takes forever. This is 1 point. A lot of the scalps end up being 1 point on the S&P. The goal being a point a day. The old adage that we love using, a point a day keeps the job away. Because the cool thing is 1 point with, 5 contracts is just as feasible as 1 point with 1 or 1 point with 20. It might be having a little bit of a hard time when you start going above that these days, but a point a day. Or a couple. It doesn't hurt. It's the same thing with like the NASDAQ as an example. A few years ago, the NASDAQ wasn't even in my trading rotation. I couldn't care less about the NASDAQ 3-4 years ago. Now it's one of the primary things that we trade along with the S&P. It's just, in a couple of years, maybe it'll be different again. Who knows? Maybe Bitcoin futures will be the main mover. I don't know. But it does, historically at least, tend to change. The most active market tends to change once every like 5 years or so. NQ's freaking crazy, yeah. Trading until consistent is a great question, but it's another one of those that is a vague response. Obviously, I have my own response. It took me like 8 years. It's not, it took me a long, keep in mind, I started like when I was 18, young, dumb, and stupid. But, that said, worked my way through the young ego, I guess. Everyone's answer for that's going to be different. It depends more so on your psychological fortitude. Honestly, and I think anybody who's been trading for a few years will attest to that. The strategy is something that you can learn in a week, a couple weeks. The strategy is super simplistic. You can make it as complicated as you want. But, right, and that's a big but at the end of that. The psychological side of things is where people get buried, right? They do really well on sim, and then they go to live and they get railroaded, and they try to figure out what happened. Well, I didn't change anything. Well, you did. You added the psychological factor, right? Now it's real money, and all of a sudden it starts hurting. The stress, the emotions, so it's this balance point where you kind of get used to it, but one way to get used to it easier is to reduce your risk, right? Risk less. That's why micro markets are so incredible. You can literally risk 1/10 of a mini. That's nuts. Granted, it moves 1 trillion ticks in a day now, so it can still get expensive, but it's a way that you can at least bring down your cost average. And if you're outside of the US or using crypto, you can go even beyond that, trading Forex basis on US index markets and break it down into hundredths even. So the further and lower you can bring your risk, the more manageable the emotions become. Put it in the perspective of someone comes up to you on the side of the road, and you've got $5 in your wallet and you're getting held up, and he says, "Give me all your money." chances are you're going to give them your money in both scenarios, but you're going to be a lot easier to give up the $5 than if you just walked out of the bank with $5 grand because you wanted to buy your kid a car, right? The psychological impact is drastic, right? Now, you're probably still going to give up the cash, right? But it's going to feel a heck of a lot different. So there's a big psychological aspect to it, and it is by far the hardest thing to master. And I hate using the word master because every day you learn something new about yourself from a psychological perspective. You really do. It's ridiculous. But it's, you know, it's not something that, like, feeling the fear or the nervousness or anything like that, the emotional side of things, that doesn't go away just like, oh, there it is, gone, cool. But it is a lot easier to shut that off when you're risking pennies a tick, or, you know, a 50 cents a tick versus $5 a tick. It helps a lot. Yeah, using micros is a phenomenal way to practice building and building out. Another good way is, if you have a large enough stock account or Forex, is trading the smallest lot size that you can get your hands on. Again, from a risk emotional perspective, if you're trading 1,000 lot on Forex that cost you literally like $10 to put the trade on and is moving at 1/10 of a penny every tick, like, who cares? That's so easy to manage that trade, it's stupid. Right? I mean, you can close your eyes and just click on you're a machine at that point because it's so minuscule that it doesn't make a difference. That's the idea with why sim works when you go to live, you have such a hard time. It's because the risk wasn't real on sim, and then you go to live and it is. It becomes a totally different story. So reducing your risk as far as possible is one of the best things that you can do to minimize the emotional impact. It's never going to go away. I mean, even at a penny a tick, you're still going to get that little bump in your emotional state, but it's a lot easier to control. Oh yeah, spreads on Forex suck, but just as an example, you know, or like one share at a time on a big stock account that you're just messing around with and building in and out. You'd have to have free commissions, of course, but. And that's the other side of things, and why I talk about trading such small, teeny tiny sizes, but still on live, is exactly that, T. Because the more that you do trade on live, the less psychological impact it has. You get used to it, you know. It's the same thing, different day. You know, you go to your first day of work in a brand new place, that day's going to seem like it's screamed by in minutes because it's all new. You go to that same job, the same day, the same time, every day for 15 years, different story, you know? Like, oh, here we are again, you know? So yeah, the more exposure you have to it, the better. And that's why using such minimal risk markets is such a benefit. You get accustomed to it right from the start, without having to risk massive amounts of cash, like used to be the case with the minis. Man, you make one wrong move in the minis back in the day and your account's gone. It's like, oh, cool, all right, there that goes. Sweet. $15,186 quarter is an absolute just roadblock. All right, that's going to do it. We're going into 2 o'clock. I'm not seeing many other questions coming in, and I don't really want to put any more risk on the table. I'll just take the couple points the S&P offered up and the nice little bump on the NASDAQ and call it an afternoon. Overall, really good day, all things considered. I hope you had a fantastic day as well. Of course, like I said, if you want to join me and the rest of the VIPs, you can register for a trial on the main page of SSFTG, so you can join us with the VIP live trade room through the entire morning session from 9 in the morning until lunchtime, 11:30, 12 o'clock, somewhere inside there. So, yeah, definitely have a good one. Enjoy. So that'll do it. Enjoy, rest up. If I miss any questions, we'll be back tomorrow afternoon at 1300 Eastern. For you YouTube members with the join button below the stream, we'll see you tomorrow morning at 9 o'clock while we do our morning prep. So that'll do it. Enjoy, rest up. We'll talk to y'all later. Thanks.